Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. Today I am joined by possibly the furthest people of anyone's travelled to come onto FinTech Focus TV before, Constantinople's Mac and Di. How are you both?
Oh, good to be here, Toby.
Yeah,
great to see you both.
Nice to see you.
Listen, thanks so much for coming over. I know it's not specifically to be on the show, but Constantinople's moving over to London from Australia. We're going to talk a lot about all of that sort of stuff, moved over to London from Australia. I'm excited about this. We've been speaking beforehand. I've done a bit of research before. There's so much to get into in this episode. But let's start off with a couple of introductions. If you'd like to introduce yourselves and the business.
Great. Well, I'm happy to start. So, Di Challenor, I'm co-CEO, obviously, and co-founder of Constantinople. Prior to starting Constantinople, my career has been entirely in banking. So I had the pleasure of working for an Australian bank called Westpac. And then prior to that, I spent the majority of my career in Asia with both JP Morgan Chase and also Citibank. So hardcore banker, transaction banking, front to back, all of those great sayings, everything in between.
Fantastic.
And I'm Mac. I'm the other co-founder and co-CEO, a little bit differently from Di, although I spent most of my career overseas. So I studied in the US, and then spent 17 years in New York.
Okay.
I started as an M&A lawyer. I was an investment banker at Goldman Sachs. I ended up at a private equity fund. I moved back with my family to Sydney in 2017, and I joined Westpac as the Chief Development Officer. I ran all of the corporate and business development functions at Westpac, and that was really the backstory to how Di and I met. We were appointed as the co-sponsors of Westpac's digital transformation and the build-out of Westpac's new digital bank. And it was really through that process that we had a couple of key realizations that led us to leaving Westpac and starting Constantinople.
Talk me through that. I'm always interested in the sort of genesis story of everything. So you're sat there, you give the sort of access to this digital transformation piece. What was the penny drop moment? What did that look like for you guys?
I think there are really two things. The first was, what it means for a bank to transform itself, digitally transform itself these days is, is firstly piecing together a lot of third-party SaaS systems on top of cloud. It's very, very complex and really expensive. And our first realization was, why is every bank spending tens, hundreds, sometimes billions of pounds doing these things, which of course is all mission critical and market critical. But if you compare one bank to the next, everyone's doing pretty much exactly the same thing. And so the first realization was, why? Why is every bank spending all this money and all this time in transformations that are really complex and often fail, but even if successful, are not different from what everyone else has done. And so that first realization was there ought to be a sort of a pre-built, pre-integrated infrastructure platform that all banks can leverage. Our second realization was possibly more important, though. After we built Westpac's digital bank, we took it to market, and we operationalized the digital bank the same way that all banks operationalize themselves today, which is with people. We had people doing payment ops, lending ops, hardships and collections, compliance, a whole set of manual controls. We sort of realized that we'd done a great job at Westpac of uplifting the tech stack to support modern front-end digital customer experiences. We hadn't turned our mind at all to how to transform, digitize and use software and now AI through the middle and the back office. We sort of described it at the time as we built like a digital mullet. It was sexy on the front end, but sort of disorderly.
Digital mullet is definitely something I want to use again.
Disorderly on the and manual on the back end. And we sort of had this realization that actually if you wanted to transform a bank, I think it's interesting. Most banks spend somewhere around 10% of their costs on tech. I think it always surprises people. People think, digital AI is so critical to every bank. Banks must spend 30, 40% of their costs on tech. Nearly all banks spend somewhere between 8 and 10% of their costs on tech. But they spend 50 to 60% of their costs on people. People doing middle and back office operations, which are predominantly manual. And so if you wanted to genuinely transform a bank, change the cost structure, improve CTI, you had to totally transform the operating model of the bank. And to do that, you needed a platform like what we've built with Constantinople, which manages both the tech, but then uses software and AI to manage all of those undifferentiated operational aspects of running a bank as well.
It is fascinating, isn't it, that? And when you go back into the whole concept of, I mean, I'm still getting over the whole mullet conversation there, which is going to stick. I'm going to be utilising that as my own all over the place. When you talk about that and the efficiencies that are gained from all of this, I was thinking as you were talking about an episode I've done before in here, the chap called Brian Harkin. Brian was talking about the global failure spend of digital transformations across the world, which is phenomenal. So I guess this is something there where you can come in there and replicate and ensure there's a lot less wastage around this.
Yeah, and I think we looked at that quite seriously because we have spent considerable amount of money to be able to do that. And I think if you don't have scale in banking, it's really difficult to be able to spend the amount of money that's required to set your bank up for a digital transformation. And it's also, again, so what Mac was saying is, well, what is a bank's purpose? How do you enable a bank to be quite successful? So what banks do is that they lend money, they take people's deposits and lend, and they spend all their time on running technology and operations. So we also saw that across the world, there are many, many cases where this hasn't been successful. And why does each bank have to do it on their own? Why is there not a platform that a bank can migrate its customers onto, which does technology and operations, rather than each bank, as I said, doing it individually? Banking hasn't really been solved like other industries where you've got a platform that is solving that, like in payments, like in airlines. Like these industries have really looked at what they're good at and determine what that is, and then selected partners to support that. So what we've built is a platform that has a single code base, and the platform is operating. So when you move to Constantinople, you're not having to stand up your target system, it's there. You configure it for what your go-to-market proposition is, and then you migrate your customers onto Constantinople.
It's really interesting you say that, because I've been preaching for many years from definitely not a place of any authority, but it always feels to me that the financial services industry falls back technologically against so many other spaces who get advantage on what they're doing. And I always saw it as the sort of retail aspect of how people are sort of, taking a tin of coffee beans off a shelf, and then, immediately they're being planted out in Colombia the next day. There's a whole lot of data that drives performance around it. And I feel that in financial services, probably because of regulation and maybe tradition and fear at various different stages, it's slower to embrace a lot of technology. I mean, I've said it on this show again, that if it wasn't for COVID, I think cloud would have taken longer to be fully embedded into this space. So when you spoke there about the concept of financial services, doing it its own way and not learning from places like the airline industry, etc., what do you think holds people back, and actually what will encourage them to then take this leap and buy into? I mean, you're already getting those successes, aren't you? You're looking at doubling business, as you were talking about already, for the banks that are on over the course of this year. There's some really exciting traction that you guys are getting. What's causing that compared to, I guess, a lifetime, an industry time of people being more averse to it?
I think the starting point is there's a sort of a logical or conceptual view. So, there's an article a few years ago by Matt Levine in Bloomberg, sort of one of the leading sort of banking commentators globally. He said, for various historical reasons, every bank in the world is vertically integrated. They run the business of being a bank, but they run all tech and ops as well. And he was saying, if you were redesigning the industry from scratch today, there's no way you'd structure it like that. You'd have banks focus on the business of being a bank, which tends to be the DNA of a bank. If you go into any bank and you talk to someone in treasury, credit risk, you come away and you think, yeah, these guys really do know what they're talking about. Like, that's the sophisticated part of the bank. But in tech and ops, even in some of the world's largest banks, no one goes into a bank and says, wow, that looks like Stripe or AWS inside that bank. And so Matt Levine's point was that, if you were redesigning the industry, you'd have a division of labour or responsibility, you'd have banks focus on what they're good at, and then you'd have large, well-run tech companies who'd manage all the commoditised and undifferentiated aspects of being a bank. And so that's really what we've set about doing. Now, I think, you know, even when we started on day one, there wasn't a bank that we spoke to who didn't say to us, if you can do that, that would answer all of our questions, but I'm not going to be the first bank migrating everything onto your bank. And that just reflects, you know, banks are very complex.
Yeah.
They're highly regulated.
Yeah.
They're dealing with, you know, with people's savings, and you know, this is a totally no-joke industry, and people are then rightly very nervous about
a lot of room for mistake.
there's not a lot of room for mistake. And so I think what we've done well is we've been able to nicely sort of inch our way forward. You know, we've now got 5 banks live in market running off our platform. We have another 4 or 5 signed, which we're in deployment at the moment in Australia. And these proof points that we can actually run banks across all tech and operations, that we can run them effectively in market, that we can migrate whole banks across onto our platform successfully. This has now really shifted the industry, given CEOs and boards a lot of confidence that you know, to move in this direction. And so I think that's part of it. You know, people just want to see signs of success. But equally, I think, you know, there are things like cloud, like AI, which are enablers of a business model like ours. There's no way you could do what we're doing. There's no way that you could look to, you know, reduce cost to income in our client banks by 30-40% as we're doing without cloud and without AI as fundamentally enabling technologies.
Talk to me about where that 30 to 40% comes from.
So, you know, so what we're replacing, I mean, people always, you know, when we explain our business, most people say, well, you can't possibly mean that you do all of this. Look, you know,
That's
maybe
my position.
maybe you mean you do core banking or payments, or maybe you do all of the tech. But you can't mean that you do operate. You can't do all compliance or reg reporting. Actually, we do all of those things. We really do everything that you can think of as commoditized and undifferentiated in a bank, where obviously decision making remains with the bank. The bank's the licensed entity, they've got the regulatory obligations, but we manage all execution on behalf of the bank. And so, you know, that has taken a while for people to, you know, to really digest and get their head around. But as I said before, with these proof points that we've now got in market, there's a lot of interest.
Rewind to those proof points, because I completely get that sort of thing, right? You're there, you've got a great idea, you've got the pedigree of both of you two, and the batch record that you've just spoken about. But you're going in there and you're dealing with banks, which are notoriously difficult in procurement to get on board, and you've done that, you know, up to 10 times so far. But I think you mentioned at the start there that, you know, when you're first looking at it and you're saying, right, you can't really do all of this sort of stuff, it's this sort of thing, it's risk. How did you get? What was the story behind the sort of first, you know, the first win? How did that come about? And what did it take for someone to buy into you and trust you and give you that opportunity?
Yeah, I mean, I think your first client when you're starting a company is someone who believes in your vision. So we were really fortunate that Great Southern Bank was our first client in Australia who had an opportunity to build a business bank and needed a different way to deliver that business bank. They have a retail bank, but they didn't want to use that platform to take a new bank to market. And so at that time, we had just come out of building the digital bank, as we said at the start, and we had a really good, you know, we knew how to do it. We had a blueprint. We wanted to do things differently, of course, and we wanted to really address some of the issues that often are not really thought about, which was around compliance and real-time regulatory reporting and giving CEOs a lot of visibility into how we run the bank for them. So that sort of bringing together Great Southern Bank and us to deliver the business bank was the first proof point. We got that to market, and then we won our second client, which was around embedded finance. with one of Australia's leading accounting platforms called MYOB, where we've embedded the banking capability into a what they call MYOB Solo, which is an accounting and banking package for small businesses, sole traders. And that's been amazing because in that proposition, we've taken something new to market. We've used AI to really change the way small businesses run. And then from there, we were really fortunate to win our first retail bank, who was looking at how to transform themselves. A traditional bank, they served a particular area of the market. They were really looking for what does their next 10, 20 years look like, and who was the partner that could help them, who could help them achieve that. And so they are migrating their entire retail bank onto our platform, or they have. And now we're really working with them on growth and helping them grow. And in that growth story, they needed to unlock capital. So they needed to change their operating model, reduce their cost to income so that they could use that capital to lend. And that's just 3 of 5 I could go through. But each time we keep moving the ball forward or achieving more and more.
Well, you've got more and more feedback, haven't you, at that sort of stage?
And the platform has, we've been, we were created in the AI era, so that's really enabled us to bring that to life. And that's another big challenge for banks is how do they address that when they have a fragmented legacy platform? For us, because we've built so much of the knowledge into the software, that enables us to really be at the frontier of what's happening in AI.
Because this is interesting for me because there are 2 things that struck me when I was reading up about the company beforehand. The first part of it was sort of AI native, and the second part of it, which I always think is interesting, it's like saying, it was unique. It was the first to market. You're breaking boundaries. This hasn't been done before, and that's a fantastic spot to be in. But it's also a the early adopter piece is incredibly important to it. So you've got more of a challenge when you're getting people to buy into something that's never been done before. Yes. Have you managed to create that sort of buy-in, that trust, that faith? I mean, I guess the success stories definitely help with that.
It's a constant, we do what we say we're going to do. I think you win trust by making sure that your team has the right capabilities, they have the right expertise as to what it takes to run a bank.
Yeah.
If we're going to be lucky, we're not lucky, but someone's going to say, right, I'm going to trust Constantinople. Yeah. The software and how we've built it is super important, but actually who's behind it. Yeah. And so we've built out a fantastic array of people to support that.
And who's behind the people as well, because I've seen the investors who put money and faith behind it. Yeah. That's been impressive as well, right?
Yeah.
Yeah, and I think just to go back to your earlier question, Toby, I think one of the things we heard early on from a lot of banks would say, I'm really attracted to your model. I think it answers all of the questions that I've got. Because, of course, one of the difficulties historically with a lot of point solution providers in banking is you go in to see a CEO, let's say you've got a nice piece of ledgering software, you go in and you say, I've got a solution to one of your 100 problems, but you're going to have to figure out the other 100 problems yourself. And particularly for mid-market and smaller banks, that's really challenging for them to do. And so, the fact that everything is bundled together, on the one hand, makes it a big decision, of course, for a bank, but paradoxically or counterintuitively, it's somewhat easier for a bank just to say, no, I'll take everything that you've got. One of the things that we heard, though, from a lot of banks would say, but I feel like with moving everything into a single vendor, I really feel like I'm giving up control over my bank. And for many years, we'd sort of try to respond really logically to that. And eventually we sort of, we started reframing it that actually for most banks, they're not giving up control when they move to us. They're actually getting back control. Because today, nearly all banks have the illusion of control. They think they understand what's going on in their bank, but they really don't. They don't have any real-time visibility into their controls environment. Controls are mostly manual. And so a big part of what we've done is by using software, automation, a lot of AI now across all of the controls environment, you can give confidence to a bank of exactly what's going on in their bank at any particular time, which then allows them to discharge their regulatory obligations more effectively. And so, this is sort of something that we've seen over the last few years that, banks have got increasingly more confidence about running their bank on Constantinople. And to Di's earlier point, what we've seen is that some of our biggest advocates in banks are the chief risk officers and the chief compliance officers.
Yeah. And I imagine some of the biggest or pushback might be the technology teams themselves, where there'd be that sort of that threat or fear that comes into it, and particularly when we talk about AI and its narrative, which I've got my own theory on, but the narrative around headcount reduction and displacement and all this sort of stuff. How are you dealing with that side of things?
Well, firstly, I'd just say, even within our own company, we have 200 people, heavy focus on engineering. While obviously we see significant efficiencies in terms of code development using AI, we don't see any reduction in the number of engineers that we're managing. And that's partly because
just productive engineers is my thought.
So you're building a lot more.
Yeah.
So these are not exact numbers, but let's say 3 years ago we may have had 5 million lines of code in the company. Today we have 20 million lines of code. There's just a proliferation of the amount of code that you can write. So the surface area of what you can build has really expanded because of AI. But you need a lot of people to now manage that proliferation of code. And so, I think it's one of these counterintuitive aspects of the new technology that it probably will result in a lot more opportunities for people than just seeing a reduction of. You'll definitely see a reduction of the old type of jobs, but it creates a lot more jobs at the same time, and that's the discussion that we have with our client banks as well. You'd mentioned, do tech teams get nervous when potentially partnering with us? The answer is sometimes. But what we're often saying to banks is, your engineering teams and tech resources should not be spent on these things that are completely undifferentiated between banks. No one says, I bank with RBS or Lloyds because I just love the quality of their reg reports to the PRA or whatever. These are...
I've not heard it.
Yeah. And so what we're trying to say is, let us manage all of the stuff of banking, and you should focus your resources on the things that really matter to your customers, that really differentiate you in market. And so that might be digital marketing, it might be, data analytics, might be a focus on differentiated credit underwriting, or whatever it might be, whatever the thing is that differentiates your bank. And so we don't necessarily see, and so once we're able to get banks understanding that this isn't necessarily just a simple sort of one-for-one reduction of resources, that really it's a division of responsibility that allows the bank to then refocus on and use its resources in different areas.
And I think the battle for customers from a bank's perspective is not going to be on the number of products you have. I mean, that's playing out in front of us. It's how you understand your customers. So if your team is constantly plagued by can't get data out, I'm dealing with operational issues, I've got 100 systems to go in to try and map a customer together, you're actually really frustrating your team and not enabling them to actually serve their customers well. So I think if you look at Constantinople as that enabler, and then your teams and your people, you're shifting them into roles that are going to help your bank grow. That's really exciting. We talk to a lot
proper work, isn't it?
Proper work.
Yeah.
We go in and talk to our clients today. Their teams are so excited at what Constantinople enables them to do. They can go in and run a Claude query on a data lake, and there you go. There's a new marketing campaign. So that is really this is a really big shift for a bank to be able to shift their people from these tasks that I don't think they get a lot of satisfaction from, to being able to focus on growth, and focusing on growth in terms of what their customers want and improving customer experience.
I think that's such an important narrative, isn't it? And I think narrative is the big play behind this. I think we've moved on from the us versus the machine debate that's sort of have been for the last 18 months. I think people are recognising now this is about, imagine what more we can do, and imagine the creation, imagine all that sort of thing. And that to me is very exciting. I could be talking about all of this for hours, and I've had 2 waves now from behind the camera. So I'm going to move into the two final questions. The first one is again, something I read when I was doing some research earlier, which is you guys talking about the future of banking effectively being platforms. I'd love to get a sort of brief overview of that and what that means to you guys. And the final thing that I'll do afterwards is what's next for the business. Obviously, you're over here in London.
Yeah.
You guys have been commuting to and from Australia, and congratulations for both of you for looking so fresh after arriving yesterday.
And 25.
So tell us a little bit about what's those two things. First off, let's go with the whole the platform future piece, and then actually what's next for Constantinople.
Yeah.
I think on the platform side, what I find interesting, if you look at some of the best neobanks here in the UK, so Revolut, Monzo, Starling, their average revenue per customer somewhere around £50.
Yeah.
If you look at a high street bank, average revenue per customer is probably 500, 600, 700, 800 pounds per customer.
Yeah.
And so, we sort of, I think what the neobanks have done is remarkable. It's fundamentally changed how banks think about customer experience and the like. Amazing numbers of customers at these neobanks, but they've really done nothing to disrupt the sort of the incumbent industry. But what's interesting is that if you look at the cost to serve of the neobanks, it's sort of around 10% of the costs of a high street bank. And so, I think part of our insight for starting Constantinople is that we wanted to bring neobank-like operating efficiency and cost efficiency to incumbent banks, and that if you did that, you'd place the incumbent banks in a very strong position. They've got dominant market position.
Yeah.
Sticky customer base. They've got very high ARPUs. They just have a big problem with costs.
Yeah.
And so
this is a big way to reduce that.
And platforms are the way that you have to solve those problems. But of course, a platform is not just a shared tech platform. It also has to be a shared platform across a lot of the operational activities in a bank, which is actually, as we discussed before, where most of the cost sits in a bank. And so that was sort of that was really our thinking around how platforms could materially reduce cost to income in incumbent banks.
It's fantastic. And let's have a word to the future.
Well, we have been really looking for an opportunity to expand internationally. We've been super deliberate around how we run the company, making sure we achieve our milestones, and our current clients in Australia are really satisfied, and that the business is in a position now where we can expand internationally. So we're here in the UK. As you said, we've been travelling back every month for about the last 5. We've hired a team here, and we're excited about the opportunities that we see in the marketplace.
And tell us why the UK, because as we were talking about beforehand, there's plenty of opportunities. You spent 17 years in the States.
Yeah.
There's obviously the Asian market, which has been attractive. But I love the fact that you're drawn to the UK. I'm very passionate about the UK fintech scene and everything else around it. Tell me a little bit about why the UK.
Yeah, I think we're drawn here by the amount of activity happening in the banking space. And Mac talked before about incumbent banks, and we think that we can enable them for the next 10, 20 years of their future. I think also the regulatory framework, there's a lot of commonality and a lot of sharing information between our regulators. And that positions us really well to be able to come into this market. We run a common code base, but we do localise that for the local market. And given our knowledge of what is going on here and knowledge of the regulatory environment, it felt like the best market to come to next. Yeah, natural next step. You said it well.
So watch this space.
Watch this space.
Listen, lovely to have you both in. Thanks so much for
Thank
coming.
you. It's great to see you. Yeah.
And thank you all for watching. We will see you soon on the next episode of FinTech Focus TV. Thanks a lot.